Okay, so very good evening, everyone. So before I start the class, the power went. I hope you all can hear. Can you all hear? Yes. Okay, good. Right. So today, our topic is manufacturing accounts. Right. So we have discussed few areas earlier. Right. Right. Chapter 1, 2, 3, 4, 5, 6, 7, up to 6 we have done. So today our topic is manufacturing account. Okay, so I will make sure once we complete this chapter, right? Once we are done with the manufacturing account, you will be able to do any question from manufacturing accounts. Right? This is one of the easiest chapter. And this is the easiest chapter in one of the easiest chapter in your syllabus. Easily you can get the marks. Okay, so I will explain from the beginning, right? Try to understand the basic, then it will be very easy for you. Okay, right. So let's move on. For the basic format, right? Manufacturing account, the basic format. Right. Okay, so the purpose of preparing the manufacturing account is to calculate the total production cost. Right, this is mainly for we prepare manufacturing accounts for companies, businesses who has a manufacturing process. So in a manufacturing business, one of the main objective of an accountant is to calculate the total cost of production, right? So when it comes to the total cost of production, there are mainly three types of cost. Three types. One is material cost, right? Number one, material. Number two, labor cost, and the other costs, right? So the key cost is material cost, then the labor, right? We will study more on costing part. In grade 13, we have costing. So we will learn more about these different types of costs in grade 13 syllabus. Okay, so simply remember there are three types of cost: material, labor, and other. Then when calculating the total cost, we need to take material cost, labor cost, and other costs, right? Then in the format, initially we divide these costs as direct cost and indirect cost. Direct cost and indirect cost. Direct cost means the cost which are directly attributable to the final product, right? If you take a table, the direct cost for the table will be the wood or the steel. So you can directly attribute that cost into the final product. Direct labor, the carpenter, the payments or the labor cost for the carpenter. So that is direct labor, right? So any other direct cost like packing charges, royalty payment, patent, copyrights, these are called the direct other costs. Okay, so if you add the direct material, direct labor, and direct other costs, we get the prime cost. Okay, then to the prime cost, we add factory overheads, factory overhead cost. So what are these factory overhead costs? These are overheads, not specifically you can identify with the final product. You can't directly identify with the final product. Examples like electricity, water, rent. So those costs are called factory overhead cost, including depreciation. So indirect material, indirect labor, indirect other. From the questions that I'm going to explain, we can understand this. Okay, so this is the basic format. In manufacturing account, what you take is 3 direct costs and the other overhead cost. Then you get the total production cost, right? From this basic format, we expand and prepare the complete format for manufacturing account. Okay, so if you take material, normally, even if you prepare a trading account, when it comes to material, there will be opening stock and closing stock, right? If you have opening closing stocks, you need to find out how much material is used. So how do you find the material used? Used material. I'll take a simple example, right? Let's say there is a stock, oil stock. Opening, there is 20 liters of oil. At the beginning, there is 20 liters oil, opening stock. Then you purchase 80 liters oil. You purchase 80 liters oil, right? At the end, you have a closing stock of 40 liters. You have 40 liters oil at the end. Can you all tell me how much is used? How much is used? You had opening 20, then purchased 80, and the closing stock 40. How do you calculate? 20 plus 80 is 100. Out of 100, closing is 40. That means you have used 60. So how do you calculate that? We take the opening stock, yeah, opening stock, add purchases minus closing stock. That is how you calculate the used material amount. Opening 20, purchase 80, and if you deduct closing, you know the used. So this is the method that we use to calculate the used material, used stock, or used stationery, or anything which we used. Okay, right. So the same way we are calculating the raw material used. Raw material used. Opening raw material purchases, and closing raw material. And also, since we are calculating the cost, any costs related to the purchases, for example, carriage inwards, taxes, duties, right? So any expenses related to the purchases, we have to add to purchases. And if there is any returns, purchase returns, we have to deduct. Okay, so that is how we calculate the raw material used. So this 500, we calculate using this. Then the next point is work in progress. In some questions, or most of the questions, there will be an item called work in progress, or that is called partially completed goods, right? Unfinished, right? Only a part of the product is completed. So this work in progress either we will add to the prime cost, right? Either we add before the prime cost or before the total production cost. This will be given in the question, right? In the question, if they mention, specifically if they mention work in progress is calculated for the prime cost, we need to adjust it to the prime cost. If not, you can always take under total production cost. So this is what you need to know in manufacturing account, the basic format. Right. Any questions from this? Right. So let's move on to the questions. Right. I have taken questions specifically for preparing manufacturing accounts. Okay. Right. So this is a question. I'll share this question with you all. A basic question, right? Right. There were some questions. Let me come back. Okay. Can you explain work in progress again? Work in progress means, now let's say we are a company manufacturing tables, manufacturing furniture. So let's say only the in the table only the top part is completed, no legs. So it's a unfinished product, right? You have used only the wood, right? Only maybe the steel, right? Only a part of the product is complete. So that is called work in progress. Right. So this work in progress, either we have to adjust it to the prime cost, or else we have to adjust it to the total production cost. So how do we adjust this? Opening work in progress is plus, opening is plus, closing is minus. The reason for adding the opening is, now previous month or previous year closing is this year opening. So that will be completed during this year. So that is why we add, right? End of the year, if you have any closing work in progress, that will be completed next year. Therefore, we will deduct it. That is why we add the opening work in progress and deduct the closing work in progress. Right, there's a question. So how do we know where to adjust the work in progress? If they mention, if they specifically mention, we will adjust it to the prime cost. If they don't mention anything, you can always adjust it under total production cost. Okay, so let's move on to the questions now. Okay, I will explain each and everything in the manufacturing accounts, right? From the basic to different complex questions we can do. Okay, so let's start with this question. I hope you all can see. Okay, so this is a question, a very basic question. KP Limited is a manufacturer of plastic products, and the following information was extracted from the books of KP Limited for the year ended 31st March 2019. Okay, so the requirement is prepare the manufacturing account of KP Limited. Right, this is a 10 marks question. Right. Right. So if we are getting a question like this, there are steps. The first step is draw the format, right? By keeping space. You keep space and draw the complete format, right? Not only for this, even if you are preparing sole proprietorship, the financial statements for sole proprietorship, partnership, companies, non-profit organizations, cash flow statement, any question, right? Always the first step is draw the entire format, right? Always try to see the question from the bird eye view, right? From the top, right? Then you can do one by one, step by step. Okay. So first we draw the complete format. So any manufacturing account question, this is the basic format. You have direct cost, direct material. So as I said, direct material will be calculated by opening purchases minus closing. So your answer is raw material consumed. Then you have another heading, direct labor and other. Direct material, direct labor, direct other. Right? Then the factory overheads. So if you look at the question, now let's read the question. Inventories, raw materials, work in progress. See here they have mentioned valued at prime cost. So if they mention the work in progress is valued at prime cost, you have to have the work in progress heading before the prime cost. You have to write the work in progress heading before the prime cost. Okay, right. Then we keep space for factory overheads, then the total production cost. I'll explain the last part later. Right, can you all draw this format? You can do the question with me, right? Sometimes for some students, this might be easy, but it's all right. From the basic, we will go to more complex and difficult questions. Okay, draw this format. And in between, if you all have any doubts and if you all want to clarify anything, you can ask from me, right? Here, around 2 lines. Here, maybe another 2 lines. Here, 8, 9 lines. You can keep space. Right. Okay, so let's start. Step 1, format. That is step 1. Step 2, the additional information. Don't try to write the information from the trial balance or from the table. Always your second step should be additional information. Additional information. Okay. So number 1, closing inventories are valued as follows. Closing inventory. Raw materials 1.1 million, 1,100,000. Right. So where do you record raw material? Here, closing raw material. Right. So we can write in second column 1,100,000. It's minus. Closing raw material is minus. Right. Then the second item is work in progress valued at prime cost. So that is here, work in progress. Minus 975. See, the closing stock is minus. Here also minus, this is also minus. Okay. Right. So then number 1 is done. We are doing the additional information. Then second additional information, 80% of the floor area of the building belongs to the factory. Right. Now, here you need to understand, normally in a business, there is a factory. This is factory. And they might have an office. And this is factory and office. And maybe they may have a showroom. Showroom. Let's say this is a company, this is Damro. Right? So their main product is furniture. So they have a factory where they do manufacturing, and they have an office for administration. They also have a showroom. Right? So let's say all these are in one place, in a one building, right? First floor is showroom, second floor is office, third floor is factory. Okay, so for this entire building, they pay 300,000 rent. They pay 300,000 rent. Okay, So how can you divide this? This 300, you have to divide. Maybe for dividing the cost, you can use different types of basis. Right? Either you can divide equally. 100,000, 100,000, 100,000. Right? So that is called a base. We need a base. Right? Let's say for an example, if it is electricity, right? We need to find a base to divide the electricity. Okay. So likewise, in the question, we have the floor area of the building belongs to 80% of the floor area is belong to the factory. So factory expenses come to the manufacturing account. Okay. Any factory related expenses will be recorded in the manufacturing account. Any office related, administration related expenses will be recorded in the administration expenses, income statement, profit and loss. And anything related to showroom, sales commission, right? So those expenses will be recorded under selling and distribution expenses, right? I'll repeat, any expense related to the factory, we have to take under manufacturing account, under factory overheads. Anything related to office, administration, right? We have to take to income statement under administration heading. Anything related to selling and distribution to the income statement, selling and distribution expenses. Okay, so here what we have is 80% of the floor area belongs to the factory. Now you go to this table and check for building related expenses. We have depreciation of the building, 1,250,000. Right, 1,250,000 is the building related expense. So we take under factory overheads, building depreciation, within bracket, right? From 1,250, 80% belongs to factory. So we have to take 80% from the building depreciation. 1,250 into 80%. Right. So only 1,000 will be taken to the manufacturing account. Out of this 1,250, we have to take 80% to the factory. Balance 20% goes to administration expenses in the profit and loss statement. So that's the expense related to the building. That is the expense related to the building. Right, moving to the next. Following expense should be allocated as follows. Electricity, 80% to factory, water, 70% to factory. Can you all do that? I'll give 2 minutes. Right. Electricity, take electricity. And water. Electricity, you have to take 80%. Water, you have to take 70%. Right. So we get electricity, $600, water 294. So that is also done. Right. Right. Next. Now, the last one is manufactured products are transferred to trading division at a profit margin of 10% on cost. So that part I'll do at last. This I'll do at last. Now we have done the basic adjustments. Okay. Now the third step is the table or the trial balance. Okay. Right. So let's look at the remaining balances. Opening inventory, raw material, opening inventory 1200. So we are doing everything in thousands. So it's a must to write in rupees 1000. Raw material. Work in progress 885. Now I'm taking these balances. Work in progress 885. Yeah, 885. Purchase of raw material. So that is purchases here. 1925. 1925. Direct wages, production workers. So it's direct wages here. 1765. 1765. Direct wages. Maintenance, factory machinery. So that comes here. Factory overheads. 335. Maintenance on factory machine. Depreciation, also overhead. 1100. Salary for the factory manager. This here. Factory manager salary. 625. Right, that's all. Very simple. That's all we have. Okay. So now we can take the balances. This balance. Right. Can you complete and tell me how much is the total production cost? Raw material, direct labor and other. Get the prime cost and find out the total production cost. Okay. Right. We got the answers. We'll see. Right. So prime cost is 3,700. $7,654. Right. So it's a very simple question. Now, the last point, it says, the last point says, manufactured products are transferred to trading division at a profit margin of 10% on cost. From this cost, they add 10% and transfer that to the trading division. So we need to add 10% for this. We call it profit margin. Profit margin 10% into 10. Then the total transfer to trading division is 8419.4, 8,419,400 rupees. So that is the amount we transfer to the trading division. Okay. So that is step 4, calculation. So we have to follow these 4 steps. The format, additional information, the trial balance or the table, finally the calculation. Profit margin is 10% from the total production cost. Income statement, you have to take this amount, transfer to trading. This is the amount we take to income statement. Any questions? So this is basic. Income statement, there will be opening finished goods, and we add this amount, transfer from manufacturing minus closing finished goods. Okay. There is another question. So what will come in direct labor and direct other? Direct labor means they will give you the direct labor expenses, right? Other, normally you will get packing charges, patent, right? Yeah, I have given here. This packing charges, royalty, patent, copyrights and all comes under direct other. Okay. Let's move on to another question to understand some important points. Right. Where to record in income statement? In income statement, in the trading account, you will prepare the trading account opening stock plus you don't have purchases, you have this total manufacturing cost. That's the amount you take in income statement. Okay, so let's do another question. Right. Let's do another type of question. Okay. This. Right. So this has uh, calculating the total production cost and also unit cost. Right, let's do this. Okay. So in this question, let's read. The following information was extracted from the books of a bag manufacturer for the year ended 31st December 2012. A bag manufacturer. Purchase of raw material, carriage inwards, direct wages, packing cost, factory insurance, quality controller salary, electricity, rent, cleaning, maintenance. Additional information, inventories, raw material, work in progress, out of electricity, building rent and cleaning expenses, 25% apportioned to office. So 75% to the factory. Company completed 290,250 units during the year. Prepare manufacturing account, calculate the cost per unit. Okay, so the same format, direct material, labor and other, work in progress, prime cost. Here they have said, mentioned work in progress, where to adjust to the prime cost. So we take work in progress here, factory overhead, total production cost. Right, let's do this. Okay, so once the format is done, we have to do the additional information. Following additional information is also available. Inventories are valued as follows. 1st of January, 31st December. Raw material, work in progress. So it's very simple. Opening raw material 225. Then closing raw material 168 750. 168 750. Work in progress. Opening 147 900. Closing 140. Net amount is 7,900. Okay. Now, the next item, out of electricity expenses, building rent and cleaning expenses, 25% should be apportioned to office. So on the remaining 75%, we have to allocate to the factory. Electricity. Now see how much is electricity. Electricity. 85,000. We need to take 75% of electricity. And that is 63,750. Electricity. Then building rent. Building rent also 75%. Total 120. Out of that, 75%. 120 into 75%. And cleaning. 20,000. 75%. 75% is 15,000. Next, company has completed 290,250 units during the year ended 31st December 2012. So that is to calculate the unit cost. Okay, now we will move on to the third step. Record the remaining items from the table. Purchase of raw material. Purchase of raw material 1,350. 1,350,000. Then the carriage inwards will be added. 22,500. Purchases, carriage inwards. Direct wages 877,500. Packing cost, as I said earlier, the packing cost is a direct other expense. Packing cost 7,500. Factory insurance is a overhead cost. Factory insurance. Quality controller is also overhead. Maintenance. Overhead. Right, so that completes the manufacturing. Okay, how much is the total production cost? How much is the total production cost? Yes. Right. How much is the total production cost? I got only two answers. One is wrong. Two, eight, eight, two, eight, eight. And you need to find out the unit cost as well. Okay, 1651 wrong. 1902 550. Correct. Okay, so it's yeah, I got some correct answers as well. Prime first is 2389650. 512 850 is the factory overheads. And total production cost 2,902,500. 2,902,500. Then what is the unit cost? What is the unit cost? How do you calculate the unit cost? It's very simple. Unit cost means from the total cost, if you divide the number of units, you will get cost of a one unit. Cost of a one. 10 rupees. 290 to 500 divide by 290 250. So it's very simple. 10 rupees per unit. 10 rupees per unit. Right. Now I will do another a very important question. Right. Remember, in our exam, we don't get this type of questions. Right. There are many questions in MCQs, and also maybe some of the parts will be given in the include in other chapters, right, connected to other chapters. Okay, so I will do some MCQ questions. So let's start this. Right. So the next question I'm going to do is uh, for you to understand the complete process, like preparing manufacturing account, the trading profit and loss account, right? The entire part. Okay, this will be useful for you. This question. Right. So I'll give 5 minutes. Just try this question. I'll give 5 minutes. Okay. Right. Let's see who can do this question. I want the total production. No, they're asking the cost of goods manufactured during the year. The cost of goods manufactured during the year. Right. And also find out, I want you to calculate what is the gross profit according to the information available and what is the net profit. Total production cost is how much? Total, the cost of goods manufactured means the total production cost, yes. Right. Okay, good. I got some answers. Mostly correct, yeah. Inventories at the beginning, inventories at the end. So where do you record the raw material? Raw material beginning 10,000. I'll take it here. Work in progress, opening work in progress 2,000 here. Then finished goods. Finished goods we have to take into trading account. Finished goods 34,000. See, opening stock. So in this question, we can understand how to take the balances to the trading profit and loss account. Then the closing stock, closing inventory, raw material 11,000. 11,000. Work in progress 4,000. Closing stock, closing work in progress 30,000. Right, so that part is done. Purchase of raw materials 50,000. Direct wages 40,000. Production overheads. Production overheads 60,000. FG means finished goods. FG is finished goods. Finished goods. Distribution is 55,000. Administration 70,000. Sales 300,000. So they have given a complete information for the trading profit and loss. $40,000, and we take this. Prime cost 87. 147. 147. Good. So I got correct answers. Yeah, 147. not 49, it should be 47. 47. Yeah, good. Now the total production cost will be transferred to the trading account. So in earlier question, some students asked me where to take this total production cost, right? So this will be taken here. Normally you have in cost of sales, what you have is opening stock plus purchases. So, but here, if they have a manufacturing account, they take total production cost to this. So this 147 comes here. Net profit 24,000. Gross profit 149. Net profit 24,000. Right, very good. Let's do another question. A different type of question, okay? Any doubts? Is it clear? Is it clear? Okay, good. Now let's move to a different type of question. Okay. So the question is to calculate the prime cost. Prime cost. Okay, so the question is, a manufacturer has the following figures for the year ended 30th September 2006. Direct material, factory overheads, direct labor, increase in work in progress. That's the prime cost. So take direct material 8,000. Direct labor 11,000. Factory overhead 12,000. Right. So the question is, prime cost. So prime cost is easy. They have not mentioned where to adjust the work in progress. So work in progress will be adjusted to the total production cost. Can you all find out what is the total production cost? So prime cost is simple. What is the total production cost? What is the total production cost? This I want. I got few answers, but all the answers are wrong. Only one correct answer. Everyone else wrong. Right. What is mean by increase in work in progress? Increase. Increase in work in progress means your closing stock is more. Yeah, tell me.
So increasing is opening work in progress?
No. Increase in work in progress. For example, if the opening work in progress is 10,000, closing work in progress is 14,000. Work in progress increased by 4,000. If the work opening is 10,000, closing increased by 4,000. So if the closing stock increase, what will happen here? Plus or minus? Plus or minus?
Minus.
Minus. See the previous question. Let's say, let's go to this. Work in progress, what happened? Yeah, this question. See this. Now in this question, we did 885, 975. If the closing work in progress, if the work in progress increased, then the total cost what happened? Decreased. Okay, similarly, if the work in progress increased by 4,000, here the total cost will decrease. So you will have the total production cost as 27,000, not 35,000. So most of you all have taken it as plus. It's not plus, it's minus. So I'll give you a relationship. Write this note. This will be useful for you. The note, the relationship between closing stock and the cost. Closing stock, there is a negative relationship with the cost. That means if the closing stock increase, cost will reduce. That is this scenario. Increase in closing stock will reduce the cost. And negative. If this decrease, then this is plus. Okay. And opening stock, there is a positive relationship. If the opening stock is more, then this is also increase, right? This is actually, we use this for cost of sales and gross profit calculations. Okay. Right. Then I will move to another question. So these types of questions are important. Okay. Okay, do this question. You are given the following information for the year ended 31st October 2007. Factory cost of goods completed. Cost of goods completed. This is also a very good question. Anyone who got the answer? Right. I'll just do the basic part. Purchase of raw material 112,000. Raw material purchases 112,000. Return. I'll wait few minutes for some answers. Right. Okay, return inwards. Return inwards we don't take here. So it won't come to the manufacturing account. Return inwards goes to trading account. From sales we deduct return. So it won't come here. Right. Then decrease in inventories of raw material. So that's a closing stock. Inventory of raw material. Raw material decrease. Then what happens? Opening and closing. Decrease means this will increase. Cost will increase. Negative relationship. That's why I told about this relationship. There is carriage inwards, so carriage inwards comes here. Carriage inwards. Then you get raw material consumed. Opening raw material and closing raw material difference we have taken here. Decrease means increase. Direct wages. Now tell me how much. So can you explain the relationship? Yes, the relationship is, forget about closing stock, it won't come. Basically, closing stock, opening stock won't come. If the stock increases, right? If the stock increases, the cost will reduce. Stock increase means cost reduce, and stock decrease means cost will increase. So there is a negative relationship. Opening stock, closing stock. And carriage outwards also won't come because it is a distribution expense. Carriage outwards is a distribution expense. So we took all this direct wages also we took production overheads here. Production overheads. Work in progress. Increase in work in progress means decrease in the product, decrease in the cost. What is the answer? So from this
Excuse me,
question,
sir.
yeah.
Excuse me, sir. Can you talk a bit louder? Because I can't hear your voice. Is that okay?
Oh, yes, sure.
Okay, sir.
So the prime cost is 155. Prime cost is 155 and the total production cost is 182. 182 B. Yes. Now let's move on to an A-level question. Return inwards won't come. Return inwards goes to selling and distribution expense. Why the decrease in raw material added? Because there is a negative relationship. Will cost decrease? Okay. We'll move on to another past paper question. Same raw material, work in progress, any stock, the concept is same, right? If the stock increases, cost will reduce. Closing stock. If the closing stock increases, stock cost will reduce. If the closing stock decreases, cost will increase. Negative relationship. Opening stock, there is a positive relationship. Right now, this is a past paper 2013. Question number 6. 2013. So the question number. The information given below relates to a manufacturing business for March 2013. increase in work in progress, decrease in finished goods, direct material consumed, direct labor factory overhead. See, this is how you get the questions, right? So you need to know the basic structure, how we prepare the, how we calculate the prime cost, how we calculate the total production cost, where to adjust work in progress. So that is what we did at the beginning. Then the increase decrease part. How does it affect the total cost? Okay. So this question, what is the prime cost and cost of sales of the business for March 2013? Okay, I'll give a few minutes for you all to do this. Tell me the answer. Prime cost and cost of sales. There was a question earlier I couldn't answer. Wait, I'll check. I missed it. Now, when you do working for the MCQ, she's asking whether to attach the working to the answer paper. No. For MCQ, you don't attach any workings or any other papers. Just the final answer you have to put. Don't attach anything to the final paper. They want only the answer. Okay. Work in progress valued at prime cost. Increase in work in progress. Increase in work in progress means this will reduce by 300. If you understand this, then nothing to think. You can just write the answer. You can expect a similar question in the paper. Okay. Decrease in finished goods. Finished goods comes here. Cost of sales. So your total production cost comes here. Then what happens? Decrease in finished goods. Then this will increase. How to find whether it's opening or closing? Normally it's closing only, increase. From the opening it increased, right? Direct material consumed. Direct material consumed 300. And direct labor 200. Factory overheads 200. Prime cost. Total cost. That's it. So answer is 200 and 500. Answer 2. Now, why we add? There's a question. Why do we add decrease in finished goods? I don't know before here. Yeah, I have told relationship. Negative relationship. Negative means decrease will increase. Increase will decrease. That is called negative relationship. Remember that. Then it's easy to answer. Another question I will take. Right. Do this. 2015. Calculate prime cost and production. What is the answer? Following information relates to Sunimal business manufactures school bags. Commenced on 1st of April. Calculate the following. Raw material purchases. Direct bills. Inventory of raw material as of 31st March end. Closing raw material. 100. Inventory of work in progress, valued at prime cost. So, closing 150. Production overhead. There is no opening. There's no opening work in progress. Prime cost is 450. Total production cost is 900. Prime cost 450. Not 750, 450. How did you get 750? It shouldn't be 750 because this is minus. Closing is minus. From 600, you have to deduct 150. Okay. Okay. Once a different, we are preparing this for 1 year, annual. Starting date is 1st of April 2014. Year end is 31st March 2015. So that is closing. 2015 March is closing. 1st of April 2014 is beginning. There's a question to show previous one. This is the previous one. Okay. If you want to take a screenshot, you can take it. Let's do another question. I'll take a good one. I'm taking another past paper question. Right. 2012. So we'll do this question, 2012. A very important question. Use the following information to answer question number 1 and 2. Following information is given in relation to a manufacturing organization for the month of February 2012. Raw material purchases, direct labor, direct expenses, overheads. Inventory, 29th February, 31st January 2012. So this is opening, this is closing. 29th February means 1st of March. Assume that inventories of work in progress is adjusted at cost of production. Work in progress is adjusted to the total production cost. not for the prime cost. The manufactured items are sold keeping a profit margin of 25% of cost of sales. What is the prime cost? Cost of production, gross profit. Okay, I'll give 5 minutes. Can you all find out the answers? There is a doubt. Which one is opening? Which one is closing? This is open. Check the date. February. This is sorry. This is 31st January. I thought it's 31st March. Sorry. Okay. This is opening. It's my mistake. This is 31st January. This is 29th February. So this is the closing stock. This is closing. Always check the dates. Thirty-first January means 1st of February. That one day. So February beginning, February end. Opening and closing. Right. Find out the answer. So information you can just put it. Access. Directly. Direct expenses. See, manufacturing account is very simple. Only thing is you need to know few areas: the format, the increase decrease part, and trading profit and loss, taking from the manufacturing to the trading profit and loss. Production overhead. Opening close. Raw material opening 100,000. Raw material closing 50,000. Work in progress. Opening 100,000. Closing 150. $100,000. Finished goods. Opening 180. Closing 100. Prime cost 5. Cost of production is 800. Cost of 800. So you can find out the cost of sales 880. How do you find the sales or the gross profit? One of this. Right. I'll teach you how to find out the cost, the selling price or the profit margin if they give a percentage, margin or markup. So there is another video which I did for margin markup. I'll share that as well. Okay. So let's try to understand what is this margin, profit margin. Cost plus profit is equals to selling price. Right? Cost plus profit equal to selling price. That is a normal equation. And they are saying that profit margin is 25% on cost. On cost means if the cost is 100, profit is 25. Selling price is 125. This is the meaning of this 25% on cost. If the cost is 100, profit is 25. Now we have the cost. Then if the cost is 880, how much is the profit? Right? Then what you do? You do cross multiplication. Cross these two and multiply by 25. That is called cross multiplication. So 808,000 divided by 100 multiplied by 25 means you get the profit. Profit is 220. Then if the profit is 220, The addition of these two is selling price. Thousand. 1001. You can take any of this. You can take the cost of sale because you know only the cost of sales. So from the cost of sales, either you can find the sales or the gross profit, one of those. Cost of sales is 880. Right.